Good morning, everybody, and welcome to Elixinol Global's special investor briefing. My name is Juliana Rodley, and I'm an account director at the IR department. It is a pleasure to be supporting Elixinol with investor relations through this exciting time. Presenting today will be Oliver Horn, the Global Chief Executive and Executive Directing Officer, and also Ron Duffy, who is the Chief Financial Officer, to discuss Elixinol's signing of a binding agreement to acquire Canacare. Now, the formal part of the session will be followed by Q&A. If you would like to ask a question, we would ask that you keep those questions until the end of the briefing, and if you type them into the space below in the band at the bottom of the screen, and we'll be able to answer those questions for you. Just to let you know that this session will be recorded today, and the recording will be available online on the Elixinol website after the event. Now I'd like to hand over to the CEO, Oliver Horn. Thank you, Oliver.
Good morning, everyone. Thank you, Juliana, for the warm introduction, and welcome to all of you who joined us today. I'm grateful for your time. Look, we are very proud to announce a real transformational step towards realizing our vision of becoming a truly global hemp-derived health and wellness consumer business. Over the course of 2020, we've rejuvenated our global business. We relaunched the Elixinol brand, retained and grew Hemp Foods Australia, exited low-value aspects of the business, reduced costs, and build new capabilities to future-proof our global business. On the back of this reset, we've completed a very successful and oversubscribed capital raise at the end of last year, thanks to all your support. And this, in turn, has put us now in the most favorable position to sign a binding agreement in Europe's most promising CBD market, acquiring the strongest consumer brand Canobo, and thus vastly accelerating our global efforts in globalization, and importantly, positively contribute to our profitability targets. I'd now like to give you an overview of the proposed acquisition, its strategic rationale, and the potential impact it will have on our global business. In terms of a transaction summary, the Canacare business owns the Canobo brand, which is arguably the leading premium CBD brand in traditional retail in Germany, with over 4,500 distribution points, selling mainly oil sprays, and recently also launching a cosmetic range. It's a business that generated 2.6 million euros in revenue at break-even EBITDA, that's equivalent to 4 million Australian dollars. Very excitingly, and what really attracted us to this business, it's really the #1 brand, CBD brand, that invested in building a strong consumer brand with broad reach media and supported by TV commercials. And please, if you Google Canobo TV spots, you will see a variety of those, really testament to the great marketing capability that the organization has. The Canobo business, or Canacare business, is characterized by a capital-light outsourced supply chain model, very similar to the one that we run in Europe. We know the supply chain model very well. We know the German market well, which gives us a high degree of comfort that we understand the business intimately. Very importantly also is the people dimension, the people behind the business that we've built a really strong relationship with over the last 3-4 months as we went through extended due diligence. And we're very pleased to say that the leadership and the vendors are taking key positions in our business going forward to warrant sustainability and stability of the business to really realize its true potential. In terms of the purchase consideration and the price that Elixinol will be paying, there is a 9 million euros upfront purchase price, which consists 3 million in cash, 6 million in Elixinol scrip. By the way, this is involuntary escrow to the end of March 2022. And on top of that, if you take that number, the 9 million euros, this represents about a 3.5 times multiplier on 2020 revenues. If you compare that to just the last quarterly revenue outlook that the Canobo business has, represents about a 2.2 times multiplier, which, by the way, represents a very fair multiplier compared to other transactions in the market. And if you look at our market cap and our revenue at the moment, we're trading currently at a 4 times multiple. So this compares very favorable. In addition to the upfront purchase consideration, the vendors can also earn a second tranche earn-out of up to 15 million euros. And this is very stringent to very strong performance hurdles. the business needs to at least in 2021 deliver 6.5 million euros at a 20% EBITDA level to get any form of earnout, and maxes out at 12.9 million euros in revenue and 20% EBITDA to get the full 15 million in earnout. The earnout will be paid entirely in Elixinol scrip at around March 22. So what does a transaction really mean for us? If you just take the 4 million euro Australian dollars that the business delivered in 2020, that represents around 40% of our existing business. But importantly, it is at a break-even EBITDA level, so contributing positively to our ambition to drive profitability at a greater rate. At the minimum threshold of the earnout of 6.5 million euros in revenue delivery, it would constitute to around 10 million Australian dollars, which would be around 40% of our global business and 66% revenue growth on our F20 15 million Australian dollar business. So quite a seismic jump into our P&L, both in revenue and potentially also in profitability. But importantly, on top of that, we see incremental opportunities in synergies, how we run the business, and I come to that in a minute. Taking a step back, we had a long ambition to get into Germany, and we've been in the German market for a while now, which we've been sharing with you over the last couple of years. And the German market is highly strategic in Europe, simply because it's the highest growth market in Europe. Europe in itself is the second biggest CBD market in the world, and Germany within that is the highest growth market, expected to be at a level of around $600 million by 2025, representing about a 47% CAGR rate. So a highly attractive market for us, and we now have the opportunity with Canobo to take a leadership position in that market. On top of that national market opportunity and the growing consumer base that is really just jumping onto CBD at this stage, it is also a great access point for us to other German-speaking countries, namely Austria and Switzerland, which represent the third and the fourth biggest markets in Europe, giving us another opportunity to play the Canobo portfolio in a German language environment. So all in all, a very strategic market, a very attractive market from the consumer dynamics. The most important thing, though, that really led us to this deal, though, is the first point here on the slide, is that the regulatory environment in Germany and in Europe took a really positive turn towards the end of last year. The European Court of Justice ruled that CBD is not a narcotic, and CBD products can now enjoy free movement within and across the European Union. And this is a binding directive from the European Union to all its member countries. That means that arguably Europe now has the most favorable CBD regulatory environment, the most stable and the most positive from across the world. And that really led us to accelerate the conversations with Canobo and Canacare Health towards the end of last year, when this regulatory environment was confirmed. Coming to Canacare, the business itself and the product overview that you see here on this slide, it was a very young business established in Hamburg in 2018, so just over 3 years old, and has a very extensive range of CBD products. On the left-hand side of the slide, you see really the heartland of the products, the current existing portfolio, mainly around tinctures, oils and sprays, and that currently represents the main part of the portfolio. In the middle, you see the new skincare range, which is going to be launched towards the end of this month and has already reached 700 distribution points that are agreed. So great first sell-in, and will be supported by a German media celebrity and further supported with a broad reach media campaign, including television advertising, which has made the brand already so successful. This skincare range, by the way, is very accessibly priced between 5 and 14 euros. So we expect that this really lowers the barriers to entry into the CBD skincare for consumers, warrants significant uptake and very early success. And that's what we get really, really excited about. On top of this really exciting portfolio, Canobo has also made great strides into creating an organic offering, and some of their core products lines are already organic, and more of them will be certified or organic over time. Through our due diligence, we took great care naturally in making sure that the products are regulatorily compliant and the formulations are compliant. And we were really happy to see that the CanaCare business is undergoing, and the product is undergoing, a very stringent testing regime with independent testing of all of their products in 2 independent labs to verify result, giving us great assurance that the quality standards that the Canobo range represents are in line with our expectation. One of the key attractions to the Canobo business and a great success of the CanaCare team is the distribution that the team built across Germany nationally. And arguably with 4,500 distribution points now, Canobo is now the leading brand, the #1 brand in bricks and mortar traditional retail channels. Arguably, the crown and the jewel here is Rossmann, Europe's leading drug market chain and the #1 chain in Germany. And Canobo enjoys full distribution in every store with 2,200 distribution points. Müller, the 3rd or 4th biggest chain in Germany, 680 stores distribution, 180 stores with Butnikowski, a drug market chain more oriented towards the north of Germany. And then through our Imstam distribution partnership, 1,500 distribution points in pharmacy. All in all, giving us arguably the best reach of any brand in the German market. This is then complemented through e-commerce and home shopping reach. E-commerce predominantly towards health and beauty retailers. Flaconi, Douglas are probably the flagship names here that every European knows, and the products are fully represented there as well. Furthermore, home shopping, which has become so important, particularly over the COVID period, with HSE24, Europe's leading omni-channel retailer, both online and in TV, reaching Germany, Austrian and Swiss households, 45 million in total. And we enjoy a very strong relationship with this channel and had very successful promotions towards the end of last year that will continue throughout 2021. So taking a step back, what you can see is that this is a very broad-reaching distribution footprint, very well insulated, having a good mix of online, home shopping and bricks and mortar, and having really wide reach to all parts of Germany, which is making this a very, very attractive partnership for us. And of course, the people behind the business, I can only say that throughout the course of the last 3-4 months, where we worked so intensely with the vendors and the management team, the relationship that we've built is extremely strong. The culture alignment is very strong as well. And we found a great rhythm to work together. And that's something that we really look forward to now, working together with the key members of the team in the future, to deliver a very sustainable growth profile. On the left-hand side, you see Frank Otto. He has been an early investor into the business. He is a media personality and an entrepreneur in his own right, part of the Otto family, who really started the catalog business in Germany. And he himself is a serial founder in the media industry, runs his own media business called Frank Otto Media, with various investments in German radio channels. Also a founder of the Viva Music TV channel. That was at the time when MTV came to Germany, and him and Michael Oplish, one of the other sellers, founded the Viva Music TV channel very successfully, and put really the name on the German media landscape. Frank Otto will be joining our board as non-executive director once the transaction is closing as of May, and we're really excited of having him on board because of his network, his influence, but also importantly because of his passion for hemp. He has long harbored the vision to bring hemp to the global stage, and one of the attractions for the sellers and Frank Otto himself was to be able to join the board of Elixinol, a global company who presents all the goodness that hemp brings to consumers, and he will be joining us into the board very shortly. Oliver Heist is the managing director of the business. He's been with the business for 18 months, very seasoned FMCG professional from L'Oreal, Philips, Lifeite, Estée Lauder. So he knows the health and beauty category really well, and arguably he has driven the great success in the distribution with the customers and in the marketing area. And we're very happy that he will continue to lead the business for the foreseeable future in the function of managing director, to drive the business forward and run the SUS team, which is highly engaged and looking forward to this transaction. So we see this, the outlook for our combined business extremely positive. For one, I mentioned already some of the growth drivers here. We're looking at a regulatory environment which is very positive for CBD, arguably the best in the world now. And the German market, the consumer size, the market is very large, targeting 600 million in 2025. But on top of that, the Canovo range is already working with new product launches, which are going to materialize between now and the end of the year, with the skincare range launching 7 products imminently towards the end of this month, supported by extensive advertising and media celebrity and personality as an ambassador, which will drive further growth. This is on top of new product launches that are already on the market now, and more of them are being developed for the second half of the year. So all in all, we see significant growth drivers, for the business going forward. On top of that, we have further synergy potentials, particularly in pooling our buying power when it comes to buying raw materials and supply chain services, and we will seek very early opportunities to realize that, as well as eventually combining our organizational structures over time and seeking synergies there, for example, in the supply chain area, in order to get a much leaner way of procuring our products and goods. But excitingly also is that we feel there's a lot of cross-selling opportunities now that we can realize of Elixinol products being sold into the German channels that the Canacare Health team is so strong in, and equally being able to bring Canovo products into our network globally and seeking new sales opportunities there, adding further to the revenue that we can deliver out of this transaction. I'd now like to pass over to our CFO, Ron Dufficy, to take you through the key terms and the funding of the transaction.
Thank you, Oliver. The transaction has been structured to de-risk and limit the downside while incentivizing potential upside. The purchase price is structured in 2 tranches, an upfront consideration of 9 million euro and a performance-based earnout of up to 15 million euro. The upfront consideration is payable as 3 million euro in cash plus 6 million euro in Elixinol shares, which are priced at the 2-month VWAP calculated over the 2-month period of negotiations, which was 21 cents. The upfront shares will be subject to a voluntary escrow period until 31 March 2022. The earnout will be based on audited financial year 21 financial performance of the Canacare business. No earnout is payable if the business does not report at least 6.5 million euro revenues. A maximum earnout of 15 million euro is payable if the business achieves an adjusted EBITDA of 2.5 million euro, which equates to 12.9 million euro revenue at a 20% EBITDA. The earnout payable is proportionate to revenue delivery of between the 6.5 million euro minimum and 12.9 million euro. However, there are 2 important protection mechanisms in place. Firstly, we are determined to reward profitability. Should the adjusted EBITDA be less than the 2.5 million euro, and if a minimum of 20% EBITDA margin is not achieved, then the earnout will be discounted by 50%. Secondly, revenues that generate less than 20% adjusted EBITDA margin will be disregarded in the earnout calculation. Any Elixinol shares issued as earnout will be priced using a 15-day VWAP immediately prior to the issue date of 31 March 2022. We might turn to the appendix if we could. I'll just point out that this slide presentation that was released to the ASX yesterday has been updated today with the only change being this addition of the appendix, which seeks to further clarify the earnout mechanism and the impacts of the proposed transaction. All amounts on this page are Australian dollars. So on the left side, you can see is the scenario that no earnout is payable. 4.6 million A$ as cash and the equivalent of Elixinol shares of 9.2 million A$. So total purchase price of 13.9 million. And just below in that same scenario, nil earnout, you can see what the Canicare business contributes in that scenario. So in F20, the revenue in F20 is 4.1 million Australian dollars at a break-even EBITDA. And for F21, no earnout is payable until the business achieves a 6.5 million euro, which equates to 10 million Australian dollars. As Oliver mentioned, the revenue multiples that we're proposing to pay are quite attractive for our shareholders. And on the right-hand side is the maximum earnout scenario. So in addition to the upfront consideration, the earnout scrip payable as scrip up to a maximum of 15 million euro. The Australian dollar equivalent of that is 23.1 million, for a total potential purchase price, applying today's exchange rate, of course, of 36.9 million A$. And in that scenario, the maximum earnout scenario, the revenue of the business would be 12.9 million euro, which equates to 20 million Australian, for a minimum EBITDA of 20%. So you can see in both scenarios, the nil earnout scenario, we'd be issuing 43.9 million shares to satisfy that 9.2 million upfront scrip consideration, which equates to a dilution of 12%. In the maximum earnout scenario, assuming that the share price is constant, noting that those shares will be issued in March 2022, but as presented today, assuming the share price continues at today's price, which is 21, then the number of shares that would be issued to satisfy the earnout at its maximum would be 109.7 million shares. When added to the 43.9, the combined scrip element equates to a 33% dilution for an annual revenue contribution to the group of 20 million Australian. If we could just go back to the timetable just to recap. Thank you. So a notice of meeting will be issued to shareholders on the 15th of April, with an annual general meeting to be held on the 17th of May. The targeted transaction completion date is 5th of July, following which we would be issuing the upfront consideration shares. The earnout consideration shares would be issued on 31 March 2022, and the upfront consideration shares would be released from voluntary escrow on 31 March 2022. Back to you, Oliver.
Thank you very much, Ron. Look, I think in summary, on the board and myself, the whole management team, feeling extremely positive, about this transaction, not only because of the fundamentals of the transaction, the attractiveness of the German market, the strong business, the people behind the brand, and the profitable nature of it, but also because we've come to a transaction structure which we believe represents good value for our shareholders and as fair protections built in should the business not perform. So all in all, I guess we're standing here in front of our shareholders with a high degree of positivity towards this deal, really recommending this to our shareholders at the AGM, because we believe not only does it give us a significant advance in our strategy to build a global hemp-derived consumer business with a very strong brand in the strongest European market, but more so really drive our profitability and revenue ambition into the right direction to create a sustainable consumer products business for the future. On top of that, we have very low integration risk, how we see it, because the business is very similar to ours, and the highly capable management team of the Canacare business will continue to run the business with the key vendors, Michael Oplish and Frank Otto, both being part of our business going forward in various capacities. And all in all, that decreases the risk of the integration to a very, very low level. So I guess that's sort of in summary, from my end. I'd like to pass back now to Juliana to moderate the questions. I'm welcoming your questions, and looking forward to receiving your support. Thank you.
Thanks, Oliver and Ron. Now, if we're going to open this up to questions, as you can see, we've only got around 4 minutes left. We've already got around 20 questions that have come through. So if you do have questions, please do enter them into the script at the bottom of the screen, the Q&A section of the Zoom function, and we'll be able to come back to you with answers. And if you do have any other questions that we just don't have time to field, please send them through to info@elixinolglobal.com. Now, having a look at the first question that came through, what is the risk between now and the deal closing date that it won't go ahead?
Thanks, Juliana. I'll take that one. So the transaction is subject to customary conditions, which include ASX approval of issuing of the performance securities and shareholder approval at the AGM on the 17th of May. Which will be supported by an independent expert report. And subject to those conditions and other customary conditions, the transaction is expected to close on 5th of July.
And next question here, how do you see the product portfolios sitting alongside each other?
Yeah, I take that, Juliana. Thank you. Look, it's a very good question. First of all, we're going to play the Canobo brand in the German market. So German products for German consumers or Austrian or Swiss consumers. So German-speaking countries, clearly Canobo is the play. Elixinol for English-speaking countries, that's a play. But then also the consumer positioning is very different for both products. For example, Canobo has organic products. It's more in the natural space for consumers who are looking for natural solutions. Elixinol is a bit more in the scientific space, with more actives, more complicated and more complicated, sophisticated formulas with extra additives, and so highly differentiated to that regard in terms of formulation, packaging appeal to different consumer groups. Also, price points are differentiated, particularly on the skincare ranges. And so what we see, those portfolios, because of that, can complement each other very well and give us a broad European play across all channels, really.
And a question here, how did the transaction come about?
Yeah, it started in the summer of last year, well, the Northern Hemisphere summer last year, May, June, I think it was. The Canacare team reached out to us through their M&A advisors, identified us as a potential global partner because of our global footprint, our public company status. And at that stage, the regulation just wasn't confirmed and wasn't clear how positive it would turn out now. And as of November last year, when the European Union and the European Commission decided to declare CBD as not a narcotic, we picked up the phone with the vendors who we stayed in touch with throughout the process and said, let's do this. Let's evaluate the opportunity for real. We went to do due diligence, and here we are. So it's come out of the right intent from both sides.
And as a question that sort of follows on from that, how much integration risk do you see there being from this acquisition?
Look, this is a very simple business without being in derogative terms, but it's a very simple outsourced supply chain business. We run exactly the same business model in the UK. We know it intimately. We know the German market. We've done extensive due diligence with third-party advisors in Germany, in the German market, to make sure that the integration risk is very minimal. On top of that, we have a great understanding and great culture fit with the team. So there's a very low integration risk, really.
Okay. Can you tell us more about the people behind the business? Now, I know, Oliver, you've already gone through this in quite a lot of detail on the two major representatives, but is there anything more you can tell the group?
Yes, absolutely. So I think one of the things that why we are so excited about this is it's a unique business model. You've seen a startup business being profitable early, reaching scale and being profitable early. And the reason why that is the Canovo team and the Kanaka Health team, the people behind it know how to manage consumer media. And when you look at the background, Frank Otto, Michael Oplish, and Oliver Heist, they come all out of the media industry or consumer brands. And it's that really what has set them apart in the German market, where everybody's trying, who are passionate about the industry but don't know how to create products and brands on a larger scale. They have nailed that one. And it's really that expertise behind the people that really set this business apart from everything else that there is in Germany. And all of them, will continue in various capacities. So Frank Otto on the board, Oliver Heist as managing director, and Michael Oplish, has also been a vendor in this process. He will sit on the advisory board for 2 years to give us his consultancy services. So there's a great result and a testament in the belief of the company, and there's a joint future.
Now, we have gone just a little bit over, but there's still a fair few questions here, so we'll try and get through them. If anyone has to leave, thank you for joining us today, but we'll just keep going through a few more of the questions now. So while we're still talking about Germany, there's a question here. What proportion of your global business do you think Germany will make up in the future?
Just let's assume we're not here to give forecasts. It's not what we usually do, but I think just have a look at the earnout structure. The earnout structure starts at 6.5 million, and maxes out at 12.9 million. And so that earnout structure, let's assume the Canovo business reaches just the bottom end of that earnout structure, which is 10 million Australian dollars equivalent, and that would represent over 40% of our global business. It would be bigger than our US business. And that is for us. So that's the scale of that investment, the importance of this investment, and the potential of this investment, have really the ability to reset our entire global business in terms of revenue and also profitability, just because of the big importance that it takes in our portfolio, global portfolio.
Great. Now, this might be one starting with Oliver and then going to Ron. What does the team foresee as the need, well, if there is a need, to raise capital in the next 12 to 24 months? But we'll start with 12 months.
Yeah, I'll take this one, Juliana. Thank you. So thankfully, thanks to the great support that we received from shareholders late last year, we closed December with almost 28 million cash in the bank. I mean, this, as we've discussed, this transaction is predominantly a scrip-based consideration. So we're adequately funded to execute our plans, and we don't anticipate raising any further capital in the next 12 months.
Excellent. And we've got another question here around what has been the response from your existing shareholder base?
Look, we've been on calls with our existing shareholders throughout the last 24 hours, really, and throughout positive. I think the deal structure, it's very obvious why Germany, the leading brand in Germany, makes sense to our business. And when you then talk about the profitable nature of this business, it adds to it. And I think, and to be very transparent, the acquisition makes sense to all investors that we talk to. And obviously, what everybody's waiting for that we're working on is that the organic part of our business starts to improve its performance as well, which we're working very, very hard on, and went to great lengths last year. And so I think investors or shareholders that we talk to can now see that our business is in the best possible shape it has been for a while. And this acquisition on top of it, it's just really accelerating our journey to become a global profitable business.
Great. Look, I think we've got one more question, then we'll wrap up. There are a few questions there, Oliver and Ron, and we'll send those through to you to be able to answer at a later date. But what gives you confidence that this acquisition that you're looking at will be better than the other businesses that you've recently divested?
Yeah, very, very, very honest question, very fair. Look, we divested the parts of our business which we didn't feel contribute to profitability or our new vision of creating a consumer goods business in the wellness space. And we are now very clear about this true north that we are pursuing. So it needs to be consumer brands, hemp-based, global, and it needs to be contributing to our profitability. And the reason why we believe this is very true to our vision, and we know this business very well. It's close to our core competencies. We understand the value chain. We understand the German market. That's why we believe, this is not going to be one of those that we've divested previously, because I think, we are now sticking to our core competencies and a very clearly single focus vision.
Brilliant. Well, thank you for that. And sorry that we weren't able to answer all those questions. We'll be able to take those offline and hopefully get back to you on those questions that you've put through. I'd just like to throw back to Oliver for some closing words.
Great. Thank you, Juliana. And look, thanks to everyone who was dialed in. The entire management team, the board, we've been working on this since December. It's been a very rewarding but also intense period of time for us. But we're now standing in front of you all today with something that we believe makes sense, represents good shareholder value, and importantly contribute to creating a very, very sound, fundamental global business on which we can build our further journey on. And I thank everybody for listening today, for the ongoing support, not only last year through the capital raise, but more importantly, supporting this transaction, which is really going to be a stepping stone for even bigger things to come. And there's lots more opportunities out there. So thank you very much.
Thank you, Oliver, and thank you, Ron, and thank you everyone for dialing in today. And as I said, if you've got any other questions that you would like to propose to the Elixinol team, please send them through to info@elixinolglobal.com. Have a great day.